What is going on, traders? Short little video today. Wanted to go over what Jerome Powell said. He was speaking at the Economic Club of Washington, and he was invited to talk about recent monetary policy. He was asked about the jobs report, about disinflation, but really I think what the market wanted to hear him elaborate on was this narrative that the financial conditions are easing. Even if you look at the Fed's website, you could see that the financial conditions now appear just as easy as they were before he started hiking rates. And when he had the opportunity to correct that statement or provide a little bit more context, this is what he said.
And by the way, it's a good thing that inflation has started to come down without it. That has not happened at the cost of a strong labor market. So, and of course, since then, financial conditions have tightened significantly since then.
So let me ask it another way.
So once again, he just put out a general statement saying that financial conditions have tightened, where again, if you look at their website, you could see, and by any measure, whether you're looking at the Bloomberg index or whatever, JP Morgan, you could see that financial conditions now are either looser or just as loose as they were before they started hiking rates. So not sure what Jerome Powell is looking at, but of course the market loves this. And the S&P 500 was up 1.3% on the day. If you look at the fear and greed index, you can see that stocks are in an ultimate euphoria at the moment. And after his speech last week, we saw a record number of call options open, even more than when the GME AMC stuff was going on. Now, this is usually a short-term contrarian indicator, just like when we have a record number of puts opened up, it means that the market is likely going to see a short squeeze. Similar thing here in my view, also again with the fear and greed index being that high. However, as I stated in my video from yesterday, this inverse head and shoulders is one of the most reliable patterns in the stock market. Over 80% once the neckline is broken, that the pattern is confirmed and we see a reversal. However, if the price comes back below the neckline, then that makes this pattern rather unreliable and the chances of a failure are very high. So not only does it have a high success rate, but if that neckline is broken once again, it has an extremely high failure rate as well. Remember that February 14th, we have CPI, and if CPI comes in less than expected or as expected, I could see the market once again rallying to that 4,300 mark that I've been eyeing. If that was the level that I was eyeing, saying, you know, on a conditional basis, saying that if the Fed was dovish and earnings weren't horrendous, we could see a rally to 4,300. Now, it could go well beyond that depending on how the CPI report is interpreted. If CPI comes in higher than expected, then I do think there is a chance we tank below this neckline and this inverse head and shoulders reverses course and it does not get confirmed. I think there was a little bit of misunderstanding as well yesterday from my video when I said that I sold some stocks. The reason that I sold some stocks is not because I think we're at a top or because I think that the market is going to tank from here. It's that some stocks that I had bought in October and later were up significantly, some in the triple digits percentage points. And for me, with the really uncertain market conditions at the moment, I don't mind taking a little profit off the table. So even if the market continues to rally, I know I'm going to get comments saying, oh, you were wrong, you sold, blah, blah, blah. Yeah, but I also bought in October. What did you do? Did you buy in October? Show me the receipts. If you look at my analysis from October 4th here in the Academy, you could see I said this was a good level to start selling cash secured puts and start DCAing on blue chip stocks. And I said trying to time the bottom is useless, so erase that from your mind immediately. Instead, focus on the discount that you're getting on a blue chip stock that you've been wanting to own. Don't let anybody ridicule you for accumulating in a bear market for the long term. Also, don't let anybody ridicule you for taking profit, especially if that profit is in the 50 to 100% range. So we were buying all throughout October, and I'm okay unloading during this time when the market has really rallied and we are coming upon uncertain conditions. If you want access to all of my buys, my sells, if you want access to my analysis when we're accumulating, when we're selling cash secured puts, the options plays, the earnings plays, our futures day trades, etc. 60 plus videos of courses. Link is in the description below. Would love to have you. So click that link, talk to an ambassador, and join us today. Leave a comment down below. Let me know what you think of Jerome Powell's comments. Do you think that the market does have room to run from here? Are you eyeing that 4,300 level as well? Or do you think that the bottom of the bear market was already found? Would love to hear from you. Hit that thumbs up if you got anything out of this video. Stay safe out there, traders. Peace.